In this podcast episode, Jaspreet Singh delves into the current economic landscape shaped by central banks worldwide hoarding gold, the evolving role of the US dollar as the global reserve currency, and the complex dynamics within the Federal Reserve. The conversation explores how these shifts influence investor behavior, the implications of mounting government debt, the disruptive potential of artificial intelligence, and emerging investment opportunities within geopolitical tensions and technological revolutions. Singh also addresses the realities of the modern economy, including wealth inequality, taxation, and the importance of financial education. Jaspreet Singh explains that investing dollars in traditional markets requires understanding what a dollar truly represents. While stock market returns are often quoted in nominal terms, inflation and currency value erosion can render these gains illusory. Gold serves as a historical currency and inflation hedge, having outpaced stock market growth recently, an abnormal phenomenon given gold's lack of direct economic production. Central banks globally, including those in China, Poland, and Turkey, are aggressively accumulating gold as a form of collateral and a safeguard against the devaluation of the US dollar, which for decades functioned as the world's reserve currency. Singh highlights the significance of gold's enduring status and its resurgence as a reliable store of value amidst fiat currency instability. Singh recounts the history of the US dollar's ascent to global reserve currency status post-World War II, initially supported by the gold standard, where dollar notes were backed by physical gold. This changed in 1971 when President Nixon ended the dollar's convertibility to gold, paving the way for fiat currency and expanded monetary policy flexibility. While this enabled aggressive government spending and economic stimulus, it also introduced inflation risks, as evidenced during the stagflation of the late 1970s and the subsequent drastic interest rate hikes by the Federal Reserve. Despite interventions, the dollar's dominance faces pressure due to sustained debt, quantitative easing post-2008 financial crisis, and during the 2020 pandemic, all of which stimulated markets but also raised fears of a dollar collapse and hyperinflation. The Federal Reserve, distinct from the U.S. government and functioning independently, wields considerable influence over both national and global economies through interest rate policies and balance sheet management. Singh explains that President Trump's 2026 appointment of Kevin Worsh as Fed chairman marked a significant pivot, with Worsh known for his hawkish stance against quantitative easing and preference for raising interest rates to protect the dollar. This contrasts with Trump's previous calls for lower interest rates and greater Fed control to stimulate the economy and bolster asset prices. Worsh advocates a delicate balancing act, tightening the balance sheet by reducing liquidity while simultaneously lowering interest rates, a strategy whose feasibility remains uncertain, particularly amid declining demand for U.S. Treasuries and shifting geopolitical investor sentiment. Singh discusses strategies under consideration by the Federal Reserve, such as revaluing U.S. gold reserves at significantly higher market prices rather than the historic accounting value. This revaluation could instantly bolster the government's balance sheet without acquiring additional gold, enhancing perceived creditworthiness to domestic and foreign investors. Alongside, the government is leveraging unconventional assets like crypto holdings to augment its asset base. These moves aim to attract investment, maintain demand for U.S. Treasuries, and manage expansive debt loads in a context where traditional buyers are retreating, partly due to global geopolitical tensions and shifts in economic power. The podcast explores the ongoing economic rivalry between the U.S. and China, which extends beyond tariffs to encompass supply chain realignments and resource control, notably of rare earth minerals critical for technology and defense. Singh highlights China's strategic accumulation of gold and its ambition to internationalize the yuan as a rival global currency, framing it as a direct challenge to U.S. global financial dominance. American efforts to onshore manufacturing, invest in alternative supply chains, and curtail reliance on China for essential materials create both economic friction and investment opportunities, especially in sectors poised to benefit from reshoring and diversification. Singh emphasizes the importance of detecting shifts fundamental changes in where and how money flows as key to successful investing. Examples include increased pet ownership during the pandemic, influencing related industries, and the formation of new supply chains around strategic shipping routes due to geopolitical pressures. By monitoring institutional investment filings and government policy signals, investors can anticipate emerging growth areas before they become widely recognized. Singh also contrasts long-term investing based on researched shifts with short-term trading, cautioning against equating investing with gambling, despite inherent uncertainties. The transformative rise of artificial intelligence, AI, represents another major shift dissected in the episode. Singh discusses how his own company faced existential risks from rapid AI advancements and pivoted to integrate AI and fintech solutions in research and investment tools. AI exponentially increases productivity, reshapes labor markets, and forces firms to evolve or perish. The reduction in entry-level jobs and increased automation challenges workers, especially in low-skill roles, underscoring the necessity for individuals to acquire AI-related skills. For investors, AI introduces novel sectors tied to semiconductors, data centers, and cloud infrastructure, encouraging deeper analysis beyond surface-level hype. The episode tackles the nuanced debate about whether investing is fundamentally gambling. Singh highlights that while speculative activities with short-term horizons resemble gambling, particularly with derivative contracts and momentum trading, long-term, research-driven investing historically yields positive returns. He stresses the importance of mindset, diversification, and time horizon, warning that emotional reactions to market volatility and chasing quick gains often lead to losses. Both hosts agree on the psychological challenges, cultural fascination with risk, and the K-shaped economy's influence on individual behavior, but ultimately present prudent, educated investing as a more reliable path to wealth creation. Singh candidly addresses the economic realities facing many Americans, including wage stagnation, underemployment, and the widening wealth gap, amplified by inflation and asset-driven capitalism. He notes the polarization where asset owners benefit from policy favoring rising prices and low interest rates, while many workers struggle with real purchasing power declines. This divide fuels social unrest and economic insecurity, particularly as AI-induced job displacement accelerates. Singh underscores the urgency of financial literacy and strategic asset building as essential tools for individuals to avoid being trapped on the lower rungs of the economic hierarchy. The discussion delves into the complexities and historical context of income and wealth taxation. Singh explains how early tax systems targeted the wealthy but have gradually expanded to burden middle and upper middle income earners. He highlights systemic loopholes that allow the wealthy to minimize tax liabilities through investment income and sophisticated planning, often leaving wage earners disproportionately taxed. Singh critiques wealth tax proposals for potentially forcing asset sales and harming average investors, especially without corresponding government efficiency improvements. Practical financial education and tax strategy emerge as critical for navigating this landscape. The episode closes with a call to action on the vital need for comprehensive financial education, which is scarcely taught in traditional schooling, despite its centrality to personal well-being. Singh shares his personal journey and observations on how ignorance about money management, investing, and tax laws perpetuates economic inequality. He stresses that while systemic reforms are uncertain, individuals can gain empowerment through disciplined saving, investing, and understanding assets versus liabilities. This long-term commitment to financial literacy and deliberate wealth building is framed as essential for stability, opportunity, and the capacity to contribute meaningfully to society. Listeners are encouraged to engage with Jaspreet Singh's educational content through his Minority Mindset YouTube channel, free Market Briefs newsletter, premium research reports, and investor workshops to deepen their understanding of market shifts and investment strategies. Singh advocates a research-driven, patient approach to wealth creation amid evolving economic conditions, with plans to launch AI-powered investment tools aimed at democratizing access to sophisticated financial analysis.